Thanks for joining the Lending Leaders panel today. I'm Kate Wilson. I'm Research Director and Deputy GM at RFI Group, and I'm going to be leading the panel session today. I'm hoping for a really interesting panel. What we're going to be talking about is a lot around some of the key changes that have been happening in the mortgage market over the last 12 months or so, some of the challenges facing the industry, and of course, also looking at the future. So how can we expect some of these key changes and challenges to grow and to change over the next 12 months, and what can we look at in terms of the future of the mortgage market? Before we jump into the session, I'm going to hand over to my panelists and let them introduce themselves and their role. Why don't we start with you, Jonathan?
Hi, yes, Jonathan Turner. I'm the industry principal for financial services for Pegasystems here in Asia Pacific. I joined Pega back in September last year, right in the middle of the pandemic, which is always interesting, where prior to that I was at National Australia Bank.
Perfect. Dennis, do you want to introduce yourself?
Dennis Teale. I'm the head of local banking at Bendigo Bank, which manages our first party retail network, including our community bank model. I've been with Bendigo Bank for the past 2.5 years, and prior to that, a number of, or 4 other major banks in Australia.
Lee?
Hi, I'm Lee Rudwick. I'm the performance lead of home loans at ANZ. This manages a number of different things. It's quite a broad role covering portfolio management, credit policy change, working on proposition development, direct marketing, and a few other things. And very glad to be here. Thanks.
Great. And finally, Simon.
Thank you. Yes, I'm from Newcastle Permanent, acting head of transformation, really focused on transforming and evolving our business, particularly in the home loan space, really critical to success. Australia's second largest mutual, got over 250,000 customers, and are really sort of customer focused in terms of whatever we transform is really focused on customers. So that's me.
I think we're going to spend a fair bit today talking about transformation as well. So what I'll start off with, and I think we can't really jump into what's happening in the future of the mortgage market without talking about some of the key changes that we've seen over what is obviously quite an unprecedented last 12 months. And I will come on to the pandemic in a moment. But I think there's also a lot of changes that we're seeing in the market which probably predate the pandemic. There's a lot of other macro trends like the low rate environment. What I wanted to get from all of you before we go into some more specific questions is just what do you see as being the biggest challenge that the mortgage industry is facing today? I'll start with you again, Jonathan.
Sure. Look, I think that's a fascinating question, particularly in the middle of a pandemic, as you say. I mean, from our perspective at Pegasystems, we're sort of starting to see some trends shaping up, and some of that's somewhat geographic. I mean, the situation here in Australia, thankfully, is very different from what we see in Europe and the US. But one of the things I think we see a lot of is a demographic shift, actually changing the pattern of buying. So, we see that there is a real increased focus around digital solutions, but those digital solutions need to kind of echo the types of approach that would have been seen traditionally, probably in a more bricks and mortar type environment. We see the need for offers to be very personalized. They need to be fast. Obviously, we're in the world of sort of rapid response to need, but it also needs to be proactive. So where we see needs, they need to be proactively identified, be empathetic, and be able to sort of respond to that rapidly. So we've sort of seen that shift coming for a while. What we've really sort of started to notice though is just how much COVID has sort of lit a fire under that from our perspective.
Yeah, I think that digital theme will come back to as well, but there's definitely a trend that was already there. But as everyone has probably read, the speed of change in the last 12 months has been pretty extraordinary. Dennis, what's the key challenge that you see for the mortgage industry?
Yeah, you mentioned the low interest rate environment, which does present some challenges, but great news obviously for our borrowing customers. For us, providing a clear focus on a strong customer experience and investment in innovation is critical to meeting our customers' needs. We're really pleased that in our interim results launched on Monday, that we reported for the 4th half year running strong residential mortgage growth, currently running at about 3.6 times systems growth. For us, business confidence and consumer sentiment is up. We're in an ongoing low rate environment, a growing housing market, an improving jobs market, continued growth in regional Australia, which supports our community bank model, and our customers are showing remarkable resilience and capability. On the flip side, we remain really cautious and considered on the reality of the pandemic, the rollout of vaccines and their impact, the ongoing reality of climate change, and then the upcoming rollback of fiscal government stimulus and what impact that will have on consumer demand for mortgages.
I'm sure there's a number of people dialed in who are keen to understand what Bendigo is getting right at the moment as well. Lee, I could see you nodding along there. Agree with some of those themes? Anything else that you would add?
Yeah, definitely. There's a few themes there, but probably the two that had stood out the most for me when you think about the challenges over the next couple of years are, I think, the higher level of unemployment that's going to continue even as the pandemic seems to have not had as much impact as we thought it would, particularly after JobKeeper drops off, is more uncertainty than I'd probably first expected, and we'll probably edit some of that out. And just generally that uncertainty that's going to exist until the vaccine's rolled out, that's going to be an ongoing challenge for us. We're going to have to watch our credit performance and make sure that we get our policy settings right. But alongside that, in terms of trying to get our policy settings right, is the automation component of what we do, trying to deliver simplicity and convenience for customers and get that calibration right between making things as simple as possible while also making the right decisions. I think is going to be really important.
It's one of those things that sounds really easy, but is not that easy to deliver simplicity. Simon, anything you would add?
Look, I think the latter part of Lee's comments, I would really echo that low interest rate environment, as well as our customers are really looking for that change. So, how do we simplify our process, make it a better customer experience, but also deliver a mortgage from an industry perspective, from a business perspective at a lower cost. There's plenty of business in the industry. The industry is very active. But having a scalable process, a simple process, leveraging technology and digitisation is really the key. But from our perspective, certainly from my perspective, that low interest rate environment is really driving a lot of that.
Yeah, and I'll actually pick up on that point about the low rate environment that a few of you mentioned. I think as you've spoken about, low rates obviously good for customers, but there's also the sort of flip side to that drives a lot of competition in the market and definitely changes market dynamics. What do you see as the additional challenges that the low rate environment brings, or what is it that you feel changes, or how you operate or what you deliver to customers in a low rate environment? Is there anything that becomes more important other than rate?
Oh, well, I think it's a bit of both. I think for us, it's really keeping the customer at the center of what we do. So, the customer experience is maintained so that we have a point of difference apart from just rate and even just, we're not a digital bank. We're not trying to be, we're digital first, and we need to be in order to drive, that deliver scale to our mortgage process. Being small is good in that we can be nimble. But we can also get overrun with volume as well if we're not, if we don't do that right. So it's about actually taking on a level of scalability in our process that is really critical, particularly for someone of our size.
Dennis, you mentioned the growth, that really amazing growth that Bendigo is seeing. Is that something that has been helped by the low rate environment, or does the low rate environment create any challenges for you trying to grow in the mortgage market?
I think it's more supported by the strong stimulus in the market for government mortgages. And then it's just about getting your channel alignments right. So we're seeing a relatively even mix now, about 50-50 through third party and first party distribution channels. So getting those touch points right with our customers, adapting through the pandemic so we can move to digital signatures and online interviews and some of those hygiene factors that just enable you to keep going whilst customers can't necessarily physically come in and touch you in a personal way that they used to pre the pandemic, and just being adaptable and meeting our customers' needs.
And Lee, perspective from one of the major banks, how difficult is it operating in a low rate environment?
Yeah, well, definitely it opens up the market in a few different ways, or a few different dimensions, really. Firstly, you're seeing almost unprecedented demand in terms of application volumes in the market right now as people see opportunities to purchase, and that's good for all of us. Obviously, we're getting more volume than we would have otherwise. As soon as you get big cuts in interest rates, you also see increases in refinancing, and that's certainly something that we saw to a great degree last year. This year seems to have slowed down a little bit, but retention becomes even more of a focus than what it was before. But then thirdly, I just sort of look at the more broader economic view as well. We've got steady asset price inflation that we've got going on now. I just question where to next. You know, this is going to be very hard to unwind for the Reserve Bank now that they've got rates so low. If you think about having to increase them again, just the level of indebtedness we've got, the impact of any single rate increase will be so much more going up than what it has been going down. So I'd be very interested to see how they think they're going to get out of the low rate environment that we're currently in.
Challenges ahead.
Mm.
Jonathan, anything to add on the topic of the low rate environment?
Yeah, look, I think, cost to serve is something that always sort of comes into the equation in any sort of financial service environment. But, as interest margins drop, then obviously cost to serve becomes more and more of a challenge. And probably the challenge is more for the smaller banks than is necessarily the larger ones, because obviously, with potentially the larger book, you can spread your cost a little more. I think the challenge often is, well, how do you continue to discount and remain profitable? And therefore the question has to be, well, how do we manage that cost line really tightly to make sure that, we deliver great outcomes? The challenge in that is often that it's very easy to fall into the trap of saying, well, what we'll do is reduce choice as a result. So we'll streamline what we offer. That means we can then package up what we offer in a way that means it's going to reduce our cost to serve. But the challenge can be that you're actually leaving a lot of the market effectively on the table because you can't necessarily service them. So finding all those balances in the way that you interact, and I think Simon mentioned earlier on about being very much from the customer out. This is something that we focus on really heavily, to say, look, you've got to think about all of the aspects. You've got to make sure the customer's getting a great outcome. You've got to make sure that your shareholders are getting a good outcome and that they're seeing you being profitable. But equally, you're ticking all your regulatory boxes and doing everything else as well. So it's, it is a juggling act, right?
Definitely. And I think a lot of what we've spoken about picking up in that refinancing trend will come on to in just a moment. I just wanted to ask you all one other question, I guess more specifically about the pandemic before we talk about refinancing and the challenges that brings. Obviously, a lot of change that we've seen over the last 12 months in terms of the way we all work, the way that customers are interacting as well. Is there anything that you think has changed that you would really take forward as a lesson, or something that you hope will continue in terms of sort of more positive change in the market?
From my perspective, Kate, I think the one thing I think we hope we can do is move faster, because the pandemic really drove us to drive change, introduce new technologies and so on very quickly, and that pace of change from our perspective was fantastic. For some of our people, they sort of said, hang on, you might be going too fast here. But, to have a number of things on our roadmap, like some of the panels have mentioned, digital ID, digital documents and digital signatures and so on, that we've been able to roll out very quickly with probably less barriers than you normally have. To me, that's something that I think we probably need to retain, into the future, certainly in our organisation.
Yeah, probably echo Simon's comments. From our perspective, accelerating that digital transformation, it removed a lot of barriers in terms of getting that technology adopted and put into place, but also mobilising a workforce into a more remote setting. Instead of people coming into head offices or centralised processing areas, the ability to work from home. And I think that's something that we'll definitely keep in a post-pandemic world, is more people having the flexibility to work from home rather than feel like they've got to gravitate into a head office environment.
We've seen a huge level of interest in that. I personally have been on multiple calls with customers, both new and old, around how do we facilitate and enable a digital workforce, right? So how do we open up in a way that says, if you've got branch staff who maybe your branches are closed, but your systems don't necessarily, you've got systems set up in a quite siloed way. How do we bring that workforce into play if we want to potentially use them to do settlements or something else? So, this is a lot of the conversation and sort of questions we're getting from our sort of customers at the moment, that supporting that multi-setting workforce is coming across as being a really high priority for a lot of the organizations we deal with.
Yeah, and I'd echo the other comments really. So I'd say the cross-skilling at speed was the thing that stood out the most to me, is taking people from, as Jonathan said, places like the branch and then having to move them to other business areas like hardship at very short notice, and having them absorb that change has been a massive effort. And firstly, the people who did it did a credit to themselves. But secondly, the organisational change had to be really well managed for that to be successful. So I'd point to that as probably number one. The other thing I'd talk to just is working from home has been, I think, more successful than any of us expected it to be, and has, shown us a way that we can work in the future. What I think will be interesting is, part of the reason I think it works really well is that we all knew each other. Like, certainly us working together, we've got a close team and a close working environment. How do you maintain that culture going forward as people move on into new roles and you've got fewer interactions with people than you've had before? Great opportunity, but it's just going to be interesting to see how we manage that, I think.
Yeah, I think that's a really good point. We've gone through 12 months of having to really change how we do things, but then there's almost, we have to go back to finding, to overuse that phrase, the new normal. I'll move on to talking about refinancing. We spoke about it a little bit in just before, on in particular the low rate environment. One of the reasons we're seeing such a high level of refinancing at the moment, and also acquisition offers. I'd be keen to get your opinions on the role of acquisition offers in the market. But Lee, you touched on this a little bit before. I guess one of my key questions here is, do you think that we're going to continue to see enhanced levels of refinancing into 2021, or are you expecting it to come back a little bit?
I think it's going to be higher than where it has been over the previous few years on average. However, I think it'll be lower than what it was at the heights of last year. Last year, it looked like for a while credit growth was going to drop right off, and you get into this really tight competitive period of refinancing because it's the only way you can chase growth. When you've got a market that's growing, it gives you more opportunities to focus on the growing market and not just on each other. But definitely, I mean, the fundamentals of acquisition offers, competitive, very competitive front book pricing are not going anywhere. It's just going to be a matter of who can really nail that and succeed at it. Because if you're doing only a price-led strategy or an offer-led strategy, that's going to work in the short term, but it can get competed away. Like, what are you doing about refi to be better at it than everyone else? And then what are you doing to retain those customers as well proactively before they have the inclination to refi? That's really where the game is, I think.
Yeah, I'd agree with that. I think what we've seen in our data at RFI as well is that refinancing offers or acquisition offers in general, they work at driving acquisition, but it's a different kettle of fish when you're talking about retention. Simon or Dennis, anything that you would add in terms of what you're seeing around refinancing? Any predictions? Will we see a race to the bottom on price?
Well, I hope not. I echo Lee's comments there around, we don't see it changing a lot. We haven't seen the year kick off that much differently, but what we are seeing in our markets anyway, on Eastern Seaboard in particular, is more activity in the property market. So it's starting to give us that more natural balance. As we've seen earlier in the year, it was all about refi because that was all that was happening. The market's very strong. There's lots of activity. But we're also seeing a real trend in refinancing with extra cash. So where people are, staying home, renovating their property, that sort of thing. So there's that extra cash involved. Have anyone tried to get a tradie lately? Certainly where I live, it's very, very difficult. They're very busy, both people using their own money and borrowing it. So, so that's good. There's an extra service element there and an extra way you can have a point of difference.
Yeah, and for me, I think similar to Simon, our focus is less on a race on price and more concentration on how do we provide good value, great service proposition, and we use our people, purpose, products, technology and strategy to take that to market. So you would have noticed in our advertising, we focus very strongly on our trust score in the market. So, we rank in Australia's top 20 most trusted brands, so we leverage that. And many customers also bank with us because of our strong community bank proposition, which at its core returns profits directly to the communities that helps generate them. So since 1998, our community bank model has returned more than $250 million back to local communities, which I think helps build that trust score, particularly in the communities in which we serve. Internally, our net promoter score, employee net promoter score, suggests that 85% of our people feel proud working at Bendigo Bank. That's higher than the industry norm, And I think that shines through in the customer experience. They really go that extra mile to help our customers.
Yeah, I think that brings me on to, I guess, the other part of refinancing, which is how do you keep those customers? And at APAC, we've just done a big piece of work into customer loyalty, and trust is definitely a really key element to driving longer term customer loyalty. I would be keen to understand from the panel what you think around how to get those customers to stay with you, and how do you do that? Is it about service? Is it about creating deeper relationships? Is it about incentivizing loyalty? And in particular, with the customers are aware of front book, back book pricing to some extent. So how do you balance that as well in terms of driving customer loyalty?
I think, Kate, there's an interesting sort of thing we see here, which is that, traditionally a lot of that's been done through a fairly traditional banker network, and there's relationships there, and you can sort of build that over time. But when you're in a virtual setting like many of us are now, of course, that becomes really difficult. So, something we're very focused on at Pega is our focus around being able to do that in those interactions in a more dynamic, personalized way, but do it through whatever channel you choose to interact with, right? So, that ability to actually in real time decide on what is the next best action for this customer that will promote retention, be empathetic, think about how you're going to service this customer, is something that, we're seeing massive interest for in the market. We work with some of the biggest brands around the world in this particular area, because that ability to sort of respond rapidly to sort of changing market needs, customer needs, et cetera, is just so critical, particularly in the world we currently live in. But being able to do that across all your channels, is the secret sauce, really, because that way customer can choose their channel of choice, but you can provide them with a consistent service and a consistent approach.
Yeah, I think we've often thought of digital as being a self-service channel, but the pandemic has really shown us that it's not about leaving customers on their own. It's about how do you deliver good service via multiple channels.
Exactly right. Yeah.
I think for us, it's about it's all about that customer experience, and it includes the application, because obviously that's the customer's first taste of it, or potentially their first taste of an organisation like ours, and then continuing that on through the life of the loan. One of the things we do is, we call every broker customer that comes on board. We actually call them because, their own interactions with the broker up to that point, and we give them a call. We actually use some of our branch people to do that, who people love. They've got that real personality, and it introduces the feel of the organisation that way. But we're interested in how they can support, how we can support them, whether it be via phone, virtually, chat. We really leverage the different customer preferences there, but know that support's available. It's easy to access. It doesn't take long for us to pick up the phone or answer a chat. And for us, that's where the retention piece comes in. That the prices will be important along the whole way, along the journey, and we can help the customers as they need a hand, but really making sure we have that strong customer-focused relationship. Digital's there, but from our perspective, it's really being supported by people when they need us.
I think that broker point's an important one as well. All of our research shows that customers who go via broker end up having a weaker relationship with the lender as a result, and you really do have to work to make sure they're onboarded effectively and that they feel like they have that relationship with the lender. Otherwise, they will continue to go back to the broker when they feel like they're going to refinance, or when they have questions as well.
Yeah, and not taking it off the broker. It's, we both have a relationship. They're both our customers, and really making sure our brokers are aware of what we're doing and how we do it, and when we and obviously sending them back to the broker where there's additional borrowing, for example.
I'd say even in a broker circumstance, I think the problem remains the same, is that buying houses is a really stressful time in people's lives. It's one of the most stressful moments you're going to go through. So people, whether they go via a broker or they go direct to the bank or the lender, they need us to be there and to do our best and perform and execute at our best at their time of need. Everyone's needs are going to be a little bit different. The timing for them a lot of the time is a bit unpredictable, but regardless of that scenario, we've just got to execute our best for them at that period of time. So I think that's one. But the second one, we're also, ANZ's heavily focused on personalisation at the moment, as a lot of banks are. Everyone knows that we've got deep, rich data, but it's no longer impressive just to give the customer what they want when they need it. People expect that now, and so certainly doing it once or twice doesn't get you anywhere, but having that consistency where you meet their expectations consistently over time using that deeper rich data, we think will be a really big retention opportunity for us as well. So it's well past the vanilla stage.
Dennis, anything to add on that topic of winning customers outside of just price?
I think that customers, they judge us on every experience. So how do we make every experience matter? And customers no longer just have an in-branch experience. They touch us in many different ways, whether that's via a call centre, the digital experience, does the card work at the merchant terminal, all those little things in life. Does the experience live up to the promise that we've offered to them? And if we can maintain those types of relationships with the customer, in addition to the proactive calling program that we have on the back of our database management, then we're building that customer loyalty.
Customer service is key, making sure that customers have that via omni-channel as well. We've spoken a little bit about the application channel and the application journey and to what extent that is a really key proof point for customers. As you said, Simon, it's the first time a customer interacts with you, and that refinance as well is probably the other key truth point for customers. What I want to talk a little bit about is what we're seeing changing around the application channel. So we've spoken a little bit about digital, and that's something I think we can probably expect will become a bigger channel. I also wanted to bring in CDR here, given that that's going to have such a massive impact, and Lee spoke a little bit about the use of data. To what extent do you think CDR is going to revolutionise the mortgage application experience for customers?
Look, I think it's inevitable. I mean, you only got to look to see what's happened overseas around, a lot of the areas. I mean, you go to the UK, which are obviously pretty advanced around open banking. The obvious use cases you see around, speeding up that whole process, being able to pull in data from third-party sources, being able to do things like affordability checks and stuff like that in a sort of digital-only mode. I think are absolutely, gonna just continue to sort of come into the sort of solution set. But I think there's some other interesting stuff we're starting to see as well. A colleague of mine in the UK pointed something out to me the other day, this company called Kogo. I don't know if you've heard of them at all, but they leverage open banking data in the UK to actually do checks on companies around their sort of ethical and sustainability kind of credentials. And what they do is they come back to you and make suggested choices for you as to how you should be approaching certain scenarios. So for instance, if that's something that's important to you, and as a father of 3 sort of teenagers, I can tell you that things like sustainability is incredibly important to them, and you want to make buying choices around where you go for your next mortgage, those are the sort of credentials you're going to start to look at. So we start to see some really interesting uses of that data now coming in. So I think that'll be an interesting trend to see how that develops in Australia as well.
Yeah, for us, I think there's probably 3 key levels of trust that the customers will be thinking about in terms of who they engage with in an open banking world. So I think the first level of trust is, does the customer believe that their financial institution has their best interests at heart? The second level of trust will be, will their data be securely managed and protected? And then the trust that the financial institute will innovate and provide the best products for them on the back of the data that they originate. So at Bendigo, we're well ahead in all of these areas. And because of this, I think we're excited by the opportunity that open banking will bring. Open banking will certainly put more power in the hands of the customer. For banks that can offer a single view portal, apart from making the customer's life easier, opportunities will also exist to learn more about the customer's finances and to use that to more deeply personalise their experiences with the bank.
Yeah, I think, Kate, you talked about, revolutionise, and I've been watching with interest and attending this conference for 5 or 6 years, and we sort of keep asking that question: when's the revolution coming, and is this digital mortgage really going to be a thing? And maybe it's not a revolution, but the change is, it's evolving, and it's evolving fairly rapidly. And you can see that uptake driven by, some of the things we talked about earlier, things like low rate environments and even just customer demand increasing. But, while there's that segment of the customers who really want a very digitised mortgage process, we have more than half of our, industry-wise, and actually relative to us as well, half of our applications coming in via the broker channel. How do we use this this data to actually make that a smoother process? One of the hot topics at the moment in the industry is turnaround times. Clearly we can all do better at using that data to actually make that broker process easier, just the same as a direct experience. So I think that's that's the opportunity anyway, whether it's a revolution or not. That's the big opportunity, given the size of that market right now.
Yeah, and I think sorry, you go, Kate.
I was going to say, it's one of those things we spend so much time talking about within the industry, and I don't think a customer has any concept, or we know people don't know what open banking is, but whether they'll actually recognise that these changes have happened, or they'll just be glad that their mortgage got approved a bit quicker.
Well, they probably won't. I mean, but if I watch the people processing broker loans and I see them going through, supporting documents to that loan and thinking, oh, actually, I need, picking up the phone and say, I need another one. If we can get rid of that, and really streamline that, that's the customer won't notice. They just won't feel the pain anymore. But it's going to be critical to success.
Yeah, I'd echo Simon's sentiments, because in some ways I think it'll greatly change things, and then other components of it, I think the substance will pretty much remain similar. Existing customers expect us to be able to proactively transform their data into something useful for them, so we're not just giving them a blank slate for their application, and that's good. CDR effectively allows non-customers of your bank to have a similar expectation, which so that eats away at some of the scale advantage of major banks, which I think is probably good for customers. But we also know that it's about what you do with the data once you've got it. Like, we all know that it's been well proven now that expenses prior to a home loan aren't necessarily comparable to expenses after a home loan. So you still need someone in there to help people. You need a lender to have a discussion with the customers about their needs and objectives, and to help them understand what that financial information means once it's absorbed. So I think that there is still some fundamentals that will remain the same. This will just help execute it better.
Yeah, and I think different types of customers, it'll affect differently. Yeah, as you said, someone who doesn't have a home loan, doesn't have a house, moving into one, it's exactly that experience. They're going to need more help. Whereas the straight refi situation, where their expenses are actually, relative to their mortgage, it probably will be much more of a revolution.
Yeah, I think just picking up on that point, I think we spoke a bit about digital and how customers have been reacting and using digital, and that's not a new trend, something that's already been there, but we've definitely seen customers grow their usage and preference for digital. And then I think the other thing we hear a lot about is that CDR would help to fix an online application and make it easier for customers. A question we actually talk about quite a lot internally is there a point where it becomes too quick for a mortgage application? If you're having your mortgage approved within a couple of minutes, is that something to a customer that is something they don't want? They want some of that friction in the process so that they can ask questions and make sure they're making the right decision. I'd be keen to get your thoughts on whether you think that these key trends and plus open banking, does that mean that we're going to see an explosion in online applications or a revolution in the online channel? Or do you think it's just there's always going to be some customers who are happy to go online, and then other customers who will want that more face-to-face or in-person interaction, and maybe those segments don't change or grow too differently?
From what I see, being a little smaller, you have that ability to see across channels much better. But if I look at the type of applications we get in from our brokers, a lot of those are complex applications. Many of them the customer would struggle to do online themselves unless they had a particular level of skill. We joke about the fact that we don't see any vanilla deals from a broker. That's not but the reality is the broker value proposition attracts that because people need more help. So on that side of the market, I don't see a lot of change. I think there's definitely a segment of customers who want to apply online or start online or engage digitally. I would be one of those myself. And so we need to cater for that segment of the market. But how many, want to really go straight through or can go straight through, and how many drop out and end up talking to someone, and I think the experience we talk about with, say, a first home buyer, less likely to be digital, but we can make their process a lot easier and smoother and focus our expertise on where they need their support, how and when to do things, as opposed to worrying about their 3 payslips.
Yeah, I think that's a great point. I mean, we you know, we see this omni-channel experience has been really critical, right? You know, for too long, a lot of organizations, they've, you know, coded all the logic into whatever channel that people are interacting in, and it can become difficult. Therefore, if you sort of, as you say, start online and then you switch to a branch, you know, there's not, it can sometimes be a bit of a jarring experience. So I think that ability to have a set of business rules around the way that you want to offer your products, that manages across all those channels is just, you know, absolutely critical. And we sort of see that as being a sort of key thing that a lot of customers are actually sort of looking for now in the way that they want to sort of, you know, build their solutions. You know, I think the other thing as well is that that whole demographic shift is something that you've got to sort of think about. I mean, you know, my experience, having worked at both ANZ and National Australia Bank here in Australia, is that the risk is you build a system for now, when in reality this system is probably going to need to be in place for 10, maybe 15 years into the future, obviously with enhancements and changes and things. But, you know, you need to be able to think about what are the changing shift in demographics that's going to happen over that period of time, and how is that going to affect the way that my business is going to develop through that time as well. So I think it's quite a complex sort of scenario, because you're almost planning for future state rather than necessarily thinking about, well, what's the problem I need to solve in the here and now. So, you know, it's an interesting space.
Yeah, at Bendigo Bank, we've been in partnership with TikTok now for a number of years, which is a purely digital online play. And a couple of years ago, we launched our own online channel internally called Ben Express. So we've been watching and learning the customer experience through that channel quite closely since that point in time. So I think we believe there's a large cohort of customers, and particularly a younger generation, that feel that they want to and are capable of self-serving. But what we actually see through the application process is that there's a really high drop-off through that process. So they get to a point where they've self-served, and then they want to speak to somebody. They want advice from a real person, and they can't get that from a computer screen. So we then see them pop up in our contact centre or in a branch, where they then want to transfer that data from an online application into a physical application and have that experience. So I think the challenge for the industry is, how do we use the capability and benefits of digital and streamlined services, but make that a really omni-channel experience, so the customer can start and finish across any channel and get the advice and touch points that they need to satisfy their needs.
Yeah, completely echo those comments there. I think that digital absolutely is going to be more attractive to more people as we go along. There's going to be a bit of a segment difference in terms of who uses it more or who uses it less, but also just, we really are in the infancy. Like, we've taken what's an old application, you know, almost the paper application, and put it online, and we're asking people to fill it out with some smarts around it. Like, no one's really reimagined digital applications yet. And when we really nail it, I think that you'll see a significant portion of the industry go that way, but it'll just take a number of years for that to happen, I think.
The number one thing that comes through in our surveys as to what would make a customer go online is the ability to stop and start and go into another channel where they need to. So it's, I think, yeah, you're absolutely right. It's, customers want to use digital, but they're not necessarily comfortable completely self-serving on a mortgage application, at least most customers, but having that sort of omni-channel element or the ability to get that reassurance as they go through is really important. Given what we're just talking about it and how the application channel is changing, does anyone have any thoughts on what that means for brokers? Well, we've seen really significant increases in customers going to brokers over the last few years, and they're now, I think, 60% of applications. Does anyone think that brokers will lose out by the sort of direct channel being improved by CDR or by better omni-channel, or do brokers just meet a different need for customers?
I don't see their role changing dramatically. You know, the broker industry's done very well at you know, at that self-regulation through the SIF and so on. So you know, they're a stronger, they have a stronger position as it stands, and their value proposition as the market becomes somewhat more complex with all the different offers. You know, it only strengthens that a little bit. You know, find me the best deal. You know, which they're now, you know, obliged to do via bid. So I think all of that will work. As I said earlier, you know, they don't necessarily get vanilla, you know, those vanilla deals anyway, or certainly we talk to many brokers. That simple stuff, the customers that will self-serve that Dennis talked about probably aren't broker customers today. So I still see their role as being equally relevant because their role is important in the market, particularly for the more complex scenarios.
Going after a different group of customers. Does anyone have an alternative opinion on that?
Yeah, I think that those digital customers are both broker and first party customers collectively. So I think there will be an impact over time. I think the difference will be when the customer gets to that point where they want advice, do they go to the provider that they've started on, or do they go to the broker that they may have used previously and have that trusting relationship that sits in that conversation? And then can the broker pick that application up and continue it? Or does the broker then say, no, actually, I've got a better product for you and another solution, and hold their value? So I think there's definitely threats to both first party and third party in terms of the customer behavior and shifting to online and building capability and confidence. And I think to Lee's point earlier, that the bank that provides really nails that experience where the customer feels like they can complete completely will be the winner in it. That will impact both sides of the equation, third party and first party. But until that point in time, the customer will get to a point where they want advice and they will engage whoever they feel most comfortable in dealing with.
I mean, I think the only potential sort of thing in the future that could come in and change the landscape is probably something, from a regulatory or legislative perspective. We obviously saw some potential sort of fairly significant disruption off the back of the Royal Commission, and there's always the threat in the future that something like that could come back into the frame. I don't think it will, but I think the fact that it was floated sort of implies that there is always a little element of that in the background. I think what's quite interesting as well around the sort of whole broker network, broker channel is in the same way that a lot of financial institutions are having to evolve at the moment in the way that they approach their customers and manage their customers and deal with their customers. I think brokers have to do the same as well, right? I mean, you can't just assume that you're going to be able to continue with the same business model you have in perpetuity and not evolve, And it was interesting. I was talking to a colleague of mine in the US actually this morning, and she was talking about, she just recently took out a new loan in the US using a company called Loan Depot, which is a sort of big sort of, effectively a sort of broker over there. And she said it was a fabulous experience. I mean, compared to the bank that she'd been dealing with previously, she said it was absolutely superb. So, I think there are definitely evolutions happening globally around this. And I think inevitably some of that will happen here. And to your point, Dennis, I think the ones who really nail that experience are the ones who are going to win for the next generation of customers.
Yeah, and I mean, you've got, we're probably talking about brokers as we're implying the sort of, small business operator model, but you've also got models like Lendy that are getting that digital piece right. We work very closely with them. So it's about, I do think it's a little bit like Amazon. It's about, if you nail the experience, you'll do well, regardless of your model.
Yeah, I think there's a lot to be said for the perceived impartiality, and you've got expert advice that can be shared and help you select the right loan and the right bank for you. It's all very well for banks to execute well with a good online application, but they're helping people at the start of that funnel, I think, will always have a really strong place. So as long as brokers can maintain that image, and I think that bid will help reinforce that, there's definitely a place. I just think that hopefully in 10 years' time, when we're sitting here talking about it again, there'll be a slightly different role for brokers in these greatly improved online applications we're all going to have.
And we'll all be doing this in person in 10 years' time, hopefully.
Yeah, hopefully.
Yeah. Will it take that long?
Final question for you all, looking forward and thinking longer term here, so thinking sort of next 5-10 years, what's the number one thing that you think we will see change the industry? So when we're sitting here in 10 years' time, what is the thing that we'll be talking about that's impacting the industry?
Look, I think what's going to be interesting is to see how the as a service model starts to develop across, the banks. I mean, we're already starting to see the early signs of, we've got, Westpac with their initiatives, ANZ with theirs. They're starting to think about what's the next generation of banking look like. And what are the needs of the customers within that, right? Moving away from this concept, well, I want to take out a mortgage, to, well, actually, I want to take out a line of credit. a big part of that is a mortgage, but actually I also want to be able to bundle my credit card and leverage rates that are consistent across those products, for instance, you know. So I think, and then the natural evolution of that is then to be able to offer third-party products through that as well. So, and you know, this is where obviously the open banking piece and things like that come back into play as well. I think it'll be really interesting and actually quite exciting to see how financial services industry does evolve over the next period, because I think we're finally at a point where the systems now are capable of delivering the type of thing that we've often, you know, as you say, we've talked about for many years. And you're starting to see a lot of the organizations are waking up to that and starting to invest in, well, what does my next 10 years look like? And is that under a ANZ brand or a Bendigo brand, or is that actually under a sort of an as a service model? So, you know, I think it'll be very interesting.
I often think in these with these types of questions about my own kids who will be at a mortgage age in 5 to 10 years, and they're really different. You know, the way they want to interact with a bank or anything else is different to you know, any of us, I think, most likely. You know, they're less on face-to-face. You know, can I just send them an email? Can I just chat with them? Can I just type with them? You know, can I apply online? So that new, you know, group of first home buyers, they're going to change what we do, because we'll have to change to win them over. That's not to say that the people that are, you know, in the market today, you know, many of those will still be in the market, of course, and they might have different needs, but it's really catering for that, you know, getting that right to bring on that new group of customers is going to be critical, because they're going to demand the change.
Yeah, from our perspective, I think it's echo the comments that are already made, but the banks that can anticipate the customer life stages as they grow and go through the different life events, and you really use that open banking technology to anticipate and help meet customers' needs in a really proactive way will be the real winners in it. And I think there's also a really growing core level of interest in the next generation around what does your organisation stand for, what's your purpose, you know, are you an organisation that we can trust, are you ethical, are you somebody that lives up to our values, and are you a partner for me in taking me through those life stage events.
Yeah, and if I think mortgages, I actually go back to asset price inflation a little bit now that we're at the bottom of what appears to be the bottom of a rate cycle. What happens in the next 2 or 3 years to property prices, but then longer, you know, where are they in 10 years' time? It kind of bifurcates. On one hand, do we then see a longer term increase in interest rates and a falling of property prices or a flattening of property prices, or do we continue to see the trends that we've sort of been seeing long term in Australia for a period of time? And what does that mean for the young people that Simon was just talking about, looking to buy their first house? How do they afford it? What role does the bank play in that, and how do our credit risk approaches need to change, you know, if you do get increased asset price inflation? Societally, I'm really interested in that, because banks are central to this, and then how we're going to help people solve the problems for the future.
Well, thank you so much for all of you for your time today. Really interesting conversation. I think there's a lot of change happening in the industry, and lots that we can look forward to changing and keeping our lives interesting. So thank you all. Thanks everyone for dialing in, and enjoy the rest of the conference.